Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 25th of November, 2020. Happy Thanksgiving to those who observe it. Tomorrow and Friday are Thanksgiving as our Thanksgiving holiday here in the U.S. Notice that I'll not be here tomorrow or Friday. We'll resume again on Monday. Again, happy Thanksgiving. This is episode number 1887. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market view this morning, risk sentiment, the risk exposure overnight is neutral to slightly negative. We have a market that is pushing metals and crude, and we have risk off on the indices except for the Nasdaq. The Nasdaq slightly higher this morning, U.S. dollar down, and the competing currencies are slightly up. As of this snapshot, the overnight inventory was short 21% or so. The range has been 30.5 points, 204,000 contracts, and the overall overnight condition is balanced. Today we have personal spending, PCE price index, and new home sales at 10 o'clock Eastern. Crude oil inventories at 10:30, and in the FOMC minutes at 2 p.m. And then that's a wrap basically until Monday. Things kind of wind down very quickly today is the expectation. Okay. So you can get the summary sheet, by the way, when it's first posted by going to twitter.com/conv trading. You could see it at the top here. This is the URL. I suggest, of course, that you follow Convergent Trading. Again, twitter.com/conv trading. And this will come to you as soon as it's posted at 7:50 Central, 8:50 Eastern. Okay, so that's where we stand. Overall, you still have the harmonics and the daily range do not change. The expected daily range do not change except for once weekly. We can't really adjust those on a daily basis. No key earnings to speak of that are impacting us. Let's move on to the review segment. Yesterday, the expectation was that we would respond back. Remember, yesterday's overnight inventory was 100% long. The expectation is we would pull back and into the 96 area or so, and then we are looking for an impulse higher and in a market to push the overnight high, which was a week high, and continue to run. And the expectation is at least 36.2375. If not, remember I talked about if not taking out the week high, last week's high at 36.2950. For sure, we were taking out the prior day's high since we were gapping up, and therefore ending the one-time framing down on the daily, and it's likely to continue to have a pretty decent push higher. It brings us into this this upper distribution, and we start to monitor the levels up here. Yesterday closed at an all-time high after all. So that's scenario one. Scenario one was pretty much spot on. Pretty classic day type behavior. Here's the 4-tick Renko of what happened yesterday. There's the open, and we immediately push up and then pull back. We pulled back a little deeper than expected, but we did leave a gap zone open as expected, and then we get our first impulse right here. Crosses the red line. First impulse of 1575, and then we're simply looking for a pullback to get long. These are not my favorite These are not my favorite days, as many of you know. This slow grind up, and it seems like it's already achieved its objectives, but continues to go higher. This is a recipe for me, mostly a reversion type trader, an auction or balance type trader. For me, this is a difficult market in which to participate. So unless I catch something early that is really good, I generally kind of step aside on these types of days. Okay. What I did expect and we didn't get is a drop into the close. I was expecting it to dip into the close given the holiday and given that the market was really had 100% inventory early, which was balanced out here, of course, probably, but still we had a day that ran and continued to run, and it didn't seem to the book didn't seem to balance itself out by selling near the close. A couple of characteristics to note. The delta, as we were pushing higher here, the delta was just not participating at all. It remained negative as the market started to push into the new highs, and it later caught up. And part of that is because the Nasdaq yesterday refused to participate on the buy side. The Nasdaq was relatively weak. Let's look at the Nasdaq here for a minute. If you look at what the Nasdaq did, this is yesterday's open in the Nasdaq right here. You can see the Nasdaq moved down, and this is a 15-minute bar chart. Let's expand it. 15-minute bar chart. It moved down a little more exaggerated than the ES was, but then you see the second 15-minute bar. So now we've been a half hour, 45 minutes, an hour. So the initial balance is now in, and then we finally get the push up, and that's what starts to fuel the movement in the ES. It takes until 9:30 or so, right here, 9:30 my time, before it starts to turn up, and then the delta starts turning up with it. That made it difficult to kind of to get on something to the long side with confidence. With it hovering at 36.11 here, it was clear that it was flagging and it would likely continue, but holding on was a little bit tough yesterday. The other thing, look at the point of control here. Clearly the market did not find value at all yesterday. It continued to participate, to discover price to the upside, but it ended up balancing into the close with the point of control near highs. And so with the point of control near highs and well above the IB, VWAP, and mid, we expect the market to continue higher once it reopens. And it did. So let's take a look at what we're looking at for the overnight. This is a 30-minute bar chart. This here is the hang on. This here is the reopen before the official session ends. That's at 3:30 to 4 or 4:30 to 5 Eastern. And then we continue higher as expected. But as soon as the Asian markets open, we go sideways and we start to drift down and back. So overall, even though it looks like a double distribution profile and it can be classified as that, really the condition is balanced. Why? Because the large distribution, the point of control, and everything else is in line with yesterday's point of control and is on top of yesterday's balance. The market condition is currently balanced. If you put it down as a double distribution profile because of this, it's okay. But remember, there's not much going on until the Asian markets open, which is at about, I think it's at 7 o'clock Central or so. So there's a little bit of fluff there. Note that hang on one second, I got to clear my throat. Note that once it comes back in and pulls back up, it holds the mid and VWAP and remains under them, what we have on the low is a relatively poor or relatively weak low. The market did not really reject these prices, so my expectation is it's likely to attempt to push higher to finish yesterday for a higher high, but overall we're likely to explore lower today based on how we're set up. The current volume is 208,000, and as it says on this summary sheet, up to 400,000 is considered normal. The most common is about 190,000 or so. So it's pretty much in line with expectations. So that's it. The delta is negative, slightly negative. There's not much this overnight session, although it has normal volume, especially for a holiday, the day before the holiday. You'll probably notice that there aren't many viewers of the Trader Bite today, either here or on Periscope. Be surprised if it got above 1,200 viewers or so by the end of the day. People have here in the U.S. have already moved on and are making their way to family or are staying put due to the pandemic. So that's where we stand. In the news today, Biden's expected to discuss coronavirus response as Thanksgiving holiday nears. U.S. President-elect Joe Biden. This is, by the way, from Reuters or Refinitiv. U.S. President-elect Joe Biden will give a speech highlighting the challenges facing Americans as the Thanksgiving holiday approaches and the nation faces a surge in coronavirus infections and a wave of unpopular health restrictions. We're looking at it says that futures tracking the Dow were slightly lower a day after the index crossed 30,000 in the Dow as investors awaited a flurry of economic data, including the second estimate of U.S. third quarter GDP, which we got. European shares edged down as gains in utility and telecom sectors were outweighed by losses in automobile stocks, and so on and so forth. Overall, not expecting very much today. I'm expecting it to be very slow. At least after the European close, if not even earlier. I'm going to be gone today after noon Central. As many of you know, and it's a running joke for years now, approaching probably 8 years, that when I do take off, that's when the market actually starts moving. So prepare yourself for a busy afternoon based on that record. But in either case, of course, I'm going to wish you a wonderful Thanksgiving, and I want to express gratitude to all of you for following along over these years. We've been doing this for almost, 6 years or something. And many of you are still showing up from the very beginning. Here's where we are. Again, I know I'm sounding like a broken record with these, but this is important to track what the overall trend is and the inventory is. And so, we put in a bottom, higher low on the weekly, higher low on the weekly, higher low on the weekly, higher low on the weekly. There was a threat here on Monday that we may take out this low from last week and end the one-time framing up on the weekly, and that held on Monday. Since it held on Monday and it also broke the one-time framing down on the daily with a gap up, we're expecting it to push hard, and of course the 3608 being the key figure target on the upside, which was hit in the overnight session. It's basically where we started the day, and now we are continuing the one-time framing up with a higher low, but we've reversed the one-time framing down on the daily. So I expect us to push. Yesterday was the highest, the all-time high close on the day session at 36.3350. And I'm expecting us to challenge the 36.45 and a quarter going forward. So we'll see how that goes. But it's got all the pieces except that we're going into a holiday. That's the piece that is now in the way. That is now in the way of getting into that. But the market has come all the way back. We expect it to make new all-time highs. Let's take a look at what's expected for today. Man, my news feed has not stopped talking today. All right, so here's what I'm expecting for today. It takes me a second to get the chart ready. On a primary scenario, as discussed, we do have a slight-ish risk-off sentiment. We're looking neutral to risk-off. The expectation this morning, we're opening on top of the overnight point of control. The expectation this morning is a likely push higher, and the overnight inventory is negative 21% or so. Slight push higher, and I'm looking for it to break this overnight low and then start to take back some of the path that it took on the way up. We do have a series of singles at 18, 11, and 5 from yesterday. Those are the areas I expect this market to test out. We're also going into a long weekend after a rally, and so I'm expecting the market to kind of balance out a little bit. So that supports the primary scenario being to the sell side. I'm looking for it to come back to 36.08. Remember, 36.08. I keep mentioning this price, I know, but it's a big one. 36.08. I'm expecting it to come back to 36.08 before it either chops in here. So expect it to either chop in here or bounce. That's the primary scenario. I'm looking for clues as to I'll be looking for clues as soon as we open as to whether sellers are hitting the bid hard and if it's squeezing through or if it's the bid is being hit but is being supported by icebergs, and therefore we would be looking at scenario 2. Scenario 2 expected to be choppy again on top of yesterday's point of control and the overnight point of control in the same area. This is balance. Expecting it to be choppy, looking for an impulse up to the full session mid and VWAP, consolidate here, and then start to squeeze through the all-time high in the 45 area, and then start to push to the overnight high in this situation and new all-time highs. The all-time high in the overnight session is way up here at 36.68, and that would be the key target to the upside. Not sure if it'll get to it today, but if it does start pushing higher, it needs to get it done fairly quickly, in my opinion. Otherwise, we are looking at a pretty dead session. 68 is the number to the upside, 08 is the number to the downside, and then you have these thick stock zones in between to contend with. That is 45, 45, and then on the downside you have 23.5 or 24, which is basically the overnight low now. So that's where we stand in the big picture. Okay, Delta is still flat, where I'm expecting it to be very slow this morning. A quick look at the order flow. Actually, there's something interesting to note about the order flow. I know some people starting to head out, but it takes a while to switch to this screen for some reason, but it chokes up the PC. Look at this order flow. Check out this this size here at the overnight high. There's quite a bit of size sitting up here, and it's been sitting up here since the high was made. There was some already here before the high was made, and then the high was made on a collision, and then the market has come off. There's quite a bit, there's a little bit of size here and there in the book, but mostly it's kind of in and out. But that size up there at the 3659, 3653, 3660. That's some pretty solid size. 3665. Those are actually option strike prices. They're at 5-point increments at all-time highs. Those are good areas for folks to exit, and that makes sense to me. Also to hedge Delta and so on. So this is what the order flow looks like overnight and how things are shaping up. And as you can see, there's been a drift down really throughout the overnight session, and we're holding steady at the low end of the range. with the distribution at the low end of the range here. So I'm looking for this to kind of make an attempt higher and then start to move down more likely. That's scenario one. And then scenario two would move down, consolidate, and then push up. And then this becomes a big area for in the order flow in terms of liquidity. That liquidity is likely to remain there as we approach it, right? So we'll see how that plays out. Hopefully this was useful to you. Again, happy Thanksgiving to those who observe. I'd like to express deep gratitude for you listening and tuning in. This is the community that I've been working to create for years and years that replaced my prop shop traders. It's much bigger community, much more diverse. Of course, it just keeps growing and growing, and you're a part of it. I appreciate that. Good luck today, and I'll catch you on Monday morning. Cheers, and stay safe.